Hello, very good morning to all. Welcome to a brand new week ahead. Today is Monday, 11th of September. Your daily dose of market insights brought to you by OANDA, presented by myself, Kelvin Wong, the senior market analyst of OANDA Asia Pacific. So, very good morning to all. Let's get started. So today will be Monday, 11th of September. So before we start, let's take a look at the disclaimer slides first. All right, leverage trading is a risky activity. So this document or this presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right, so now without further ado, let's take a look at the agenda. So this will be the usual agenda that we have for our daily market dose or market dose of insight. So a recap of key highlights or events. So that will be on last Friday and Saturday as well, because there is actually a key China data release on Saturday. And also what are the next key data, economic data, as well as corporate events to watch out for today. And we will also be sharing the short-term technical outlook on the various asset classes that is actually exhibiting interesting technical configuration. So now let's keep a highlight of what's happened last weekend, pardon me, on over the weekend, which is Saturday and Sunday. So without further ado, let me share with you my screen. All right. So basically what happened over on last Saturday is there's a release of China key economic data. So the key economic data for China actually came in within expectation, I would say, but most importantly over here is that the data on China deflationary pressure, I was like to stress the word deflationary pressure, has started to actually ease off. All right, so now let's share with you what happened last the release of the data on last Saturday. Okay, so let me focus more on the screen instead, on my screen instead, rather than my face. All right, so I could see over here is there's actually this pink line and this dark blue line. So the dark blue line is considered China core inflation. So that is actually including food and energy. So what I could see over here is that August data actually managed to tick up above the 0%. Okay, so August came in at positive 0.1%. And what we could see over here is that the pink line is actually excluding core inflation. That means excluding food and energy, continue to inch higher, plus 0.8%. Plus 0.8% year on year in August, almost the same as what we see in July print. Okay, so what we could see over here is there's actually a minor uptick in both inflation as well as core consumer inflation in China. And if you look at the bottom will be the histogram. The histogram is actually the PPI, that means producers price index. That's why I consider as factory grade prices. So inflation on the producer side of the story. So we could see over here is that inflation on the producer side of the story has continued to be in negative mode, that means deflationary mode, since 9 months ago. Okay, it's been decelerating. That means, and it actually inched down to the negative. We call it mark below zero since October last year. Okay, but what's interesting over here in the last 3 months, this negative pressure has started to ease as well. So last month was actually negative 4.4 in July. So in August, it actually performed much better at negative 3%. So what you could see over here is that this key set of data, both on the PPI, the consumer inflation and core consumer inflation, the deflationary pressure in China has started to ease. And what's interesting over here is that if I were to overlay the dollar CNH, that means inverted, we could see over here is that the last few months of deflationary pressure in China has brought out also hand in line yuan weakness against the dollar. So given the fact that if we start to see further easing of deflationary pressure in China, that could actually bode well for the Chinese yuan. That means that could actually suck out we call it potential bearishness or potential weakness on the Chinese yuan. So that could eventually what I call boost a bit of confidence into the China's equity, given the fact that the Chinese yuan is likely to get at least negated, at least in the short term. And also a bunch of what I call news flow happening over the weekend on Sunday is that China has now starts to actually relax insurer, means the local China insurer, to invest in their local stock market. So what they did over here is that the China financial regulator on Sunday reduced the risk weighting that it attaches to insurance company holding of blue chip stocks and tech stocks. That means there's China blue chip stocks and tech stocks. And also they also reduced the risk weighting of what I call this REITs as well. All right. So all in all, right, it actually kind of free out further capital in we call it the capital of China insurer to actually give them more leeway to actually invest in the China local stock market. So what we could say that over here is that it's a kind of an indirect monetary policy stimulus enacted by China policy top makers instead of via direct bank lending. They actually now boost it through what I call China, we call it insurers, allowing them to actually use more of their surplus cash holding to actually invest in the local stock market. And also over the weekend, there are actually 3 Chinese cities that allow to lift housing buying curbs. So this came on the backdrop of 2 or 3 weeks ago, where major cities like Beijing and Shanghai have already lifted these housing buying curbs. So 3 more cities in Dalian and Shenyang, as well as this Nanjing, they have actually lifted their what I call their house buying curbs. So that kind of a potentially could create a bit of short-term bullish momentum back into the China stock market. I will stress the word short term instead rather than medium term or long term, as well as the Hong Kong benchmark indices, which is the considered as a proxy for the China stock market. That I will actually covered on the short term technical outlook on the Hong Kong 33 index. And also related to the FX flow over the weekend will be BOJ. So BOJ governor in his interview to one of the local Japanese press over on Saturday, he actually stating that BOJ is actually in the pipeline to actually exit from the decade plus of we call it a monetary policy easing that was enacted since the great financial crisis in 2008. As business improves. So what market actually look at it over here is that it seems to me that BOJ is still in line to actually solely exit from its negative interest rate policy, taking baby steps. So that actually see a bit of dollar yen sell off right at the start of Asia trading session today, where the dollar yen actually tumbled right below 147.90 to 146.60, 146.70 is a one big figure drop during the start of Asia session. So that I will actually cover on the short-term technical outlook on the dollar yen. Very interesting as well, given the fact that this speech of BOJ came right after the dollar index actually come very close to a key resistance level. Okay, later I'll highlight on the technical analysis chart. So now let's start with what happened, a recap on the US stock market on last Friday. So US stock market on last Friday was rather mixed, but overall for the entire week, the S&P 500 ended in the red, negative 1.29%. The Nasdaq 100 also a negative 1.36%. The Dow Jones ended with a weekly loss of negative 0.75%, and the worst performer was the Russell 2000 small cap, negative 3.6%. So all in all, what we could see over here is that the medium-term uptrends since the start of this year on the major benchmark stock indices seems to be now taking more of a consolidation mode, and also with the risk of further potential downside from the short to medium term. So if I were to actually share with you all, this is the heat map, the weekly heat map on the S&P 500 individual component stock. So I could see over here is that the worst hit were the few major cap stock. Apple down negative 5%, Nvidia down negative 7.7%, Tesla down negative 3.7%, and also the banks itself were also pretty much hit as well. Okay, so all in all, right, what we could see over here is that interestingly, even the industrial sector also get pretty much negative or pretty much bearish last week. So if this momentum will actually continue for this week, potentially the S&P 500 or the other major benchmarks US stock indices may start to see further downside. And one thing of the highlight over here is the US banks. So as you all know that US bank itself is also a key component, we call it a key component sector that we got to be mindful of, especially on the Dow Jones Industrial Average and the Russell 2000, where they have a higher component weightage. So if you look at the one of the particular instrument that I'm looking at will be the sector we can monitor will be the S&P Bank ETF, KBE in short. So what you could see over here is that in the last 4 weeks, it has been pretty much lackluster, refusing to break the 200-day moving average. And also last week performance actually underperformed the entire the 4 benchmark US stock indices. So they closed last week at negative 4.2%. And what's interesting over here is that it's now actually retesting a key intermediate support at 37.55. If we start to see a breakdown this week below 37.55, potentially it could actually see it down to retest close to the previous we call it 8 of previous May and June swing low area at this 32.30 level. So a break below 37.55 on the key S&P 500 banks ETF potentially could actually see more weakness coming this week on the benchmark US stock indices. So something to keep a close eye to watch out for. All right, so with that, let's start off with the short-term technical outlook on the indices. All right, so over here, let's start off with the since I talked about the banks just now, US banks. So let's start off with the Dow Jones Industrial Average. So for the Dow Jones Industrial Average, still recall that we are looking for a minor bounce to take shape below the 50-day moving average, which price action starts to materialize on last Friday and last Thursday. It hit that level and traded sideways for the entire session last Friday. So still no change using 34,710 as my key short-term pivotal resistance. Still looking for that short-term bearish bias to take shape on the Dow Jones Industrial Average. So in our platform, it will be the US Wall Street 30 Index, looking for a test on last 7th of September swing low at 34,310. A break below 34,310 potentially could take us down much lower towards 34,100. However, if we start to see a clearance above 34,710, then this short-term bearish bias will be invalidated to see a squeeze up to retest the 31st of August swing high area and 16th of August swing high area, acting as a resistance at 35,050. Okay, now moving on will be the US Nasdaq 100. Okay, or the so still no change over here is that last Friday it actually hit the a minor shaped that minor bounce, but holding below that 15,430 key short-term pivotal resistance that we have. So still no change using 15,430 as a key short-term pivotal resistance to maintain that short-term bearish bias, to look for a retest on this support at 15,085 level. Only a break up or clearance above 15,430 then will actually invalidate this short-term bearish bias to see a squeeze up to retest the next resistance level at 15,630, which is a confluence with 1st of September swing high area, and as well as the 2nd of August swing high area. Okay, now moving on to the German 30 or the DAX index. So still recall that in the German 30, last Friday, we have a neutrality stance between 15,850 and 15,670. Price action peaked below the 15,670 and almost reached the next resistance, almost reached the support level at 15,570. What is 15,570 is in fact the swing low area of 21st of August and 25th of August level, and as well as the 76.4% Fibo retracement of the previous minor push up from 18th of August low to 31st of August high. You could see over here. So all in all, what we could see over here is that momentum seems to be getting pretty much bullish on the short term, where the hourly RSI starts to hover above the 50 level. And so what we do over here is that given the fact that it actually shaped a strong rebound off from this key short-term pivotal support at 15,570. Okay, so we will actually be turning a short-term bullish bias for today on the German 30 index as long as 15,570 holds, potentially we may see a push up. Okay, let me highlight over here towards the 15,850 level slash 15,938 level, which is the 50-day moving average, I think, as a resistance, and as well as the 76.4 Fibo retracement from the previous short-term push down from 31st of August high to 8th of August low. All right. So, however, if we start to see a breakdown below 15,570, then this short-term bullish bias will be invalidated to see a retest at the 200-day moving average, I think, as a support, which is also confluence with the swing low of 18th of August at 15,470 slash 15,450 level. Okay, so lastly will be on the Hong Kong 33 index. Still recall last Friday on the Hong Kong 33, we have a neutrality stance between 18,890 and 17,790. So because of the closure of the Hong Kong stock market due to the massive rainfall or typhoon on last Friday, so market reopened on today. So it seems market now has managed to find some support level coming into place at 17,790, and also the hourly RSI now has started to shape a bullish divergence right at the oversold contingent, oversold region level. So indicating to us that there is this previous swift slide, or this previous downside momentum of this swift slide from 6th of September to this morning Asia session low more or less has started to ease off. So given this sign of short-term positive positive element coming back into the Hong Kong 33 index on the shorter term, so we'll be using 17,790 as a key short-term pivotal support, looking for a minor rebound scenario to retest the resistance level at 18,290 in the first step first. So with that, we're actually shifting to a short-term bullish bias to actually look to actually potentially see this short-term minor rebound scenario holding above 17,790. However, if we start to see an hourly close or breakdown below 17,790, then this short-term minor rebound scenario will be invalidated to see a retest at the to see a further slide to retest 21st of August swing low area at 17,570 slash 17,370 support level. Okay, so in a nutshell, turning bullish for a minor rebound scenario on the Hong Kong 33 index. All right, so now moving on to the FX space. So over to the FX space over here, let's take a look at the sterling dollar. So over at the sterling dollar, still recall that last Friday or last Thursday, we flipped to a bullish bias above 124.45 level. So given that this 124.45 level is so the 200-day moving average, price action actually reacted off nicely off it on last Friday US session. So still no change, use 124.45 as a key short-term pivotal support level to continue to play this minor push up or minor bullish scenario to test the intermediate resistance at 125.50 level for today. However, if we start to see a breakdown below 124.45, then this short-term bullish bias will be invalidated to see a further decline towards 123.40 support level on the sterling dollar. Okay, so that's the 1 hour chart on the sterling dollar. So what's interesting over here is that very quickly, let's take a look at the dollar index. So dollar index is considered as a summary of the major dollar pairs brought together as an index. So what's interesting over here is that last Friday push up of the dollar index now coming very close to the upper limit of the 104.45, 105.60 key short-term pivotal, a key medium-term pivotal resistance, and also the dollar index, the dollar RS, the daily RSI also start to shape a bearish divergence at the overbought level. All right, so that seems to be we may start to see a bit of dollar strength pullback for this coming week. All right, now with that dollar strength, dollar weakness coming into picture of the sterling dollar, so it seems to be spreading over to the rest of the major as well, especially on Saturday. BOJ governor remark that is actually sucking a bit of dollar strength from the dollar yen. So let's look at the dollar yen pair. So very interestingly on the dollar yen pair, let's start with the daily chart first. So if you look at the daily chart over here, is that the dollar yen is now coming very close to a key medium term resistance at 14840/85, and also the RSI, the daily RSI also start to shape that bearish divergence as well. All right, so daily chart. So very quickly recall on the hourly chart, what we have last week is that we actually have a bullish bias to see it a push up towards 14790 again. So it actually hit on last Friday. So this morning, this is the negative reaction right after BOJ governor, we call it, remark on last Friday, and right now it's actually trading back below last Friday's low. So indicate to us that there's some form of short-term bearish bias or bearish tone coming back into to the dollar yen. So with that, it seems to me that it may start to trace out a minor double top as well. So we were actually flipping to with this new elements that is negative in the short term on the dollar yen. So with that, we will be flipping to a bearish bias below 14790 key short term pivotal resistance. A break below 14630, which is the 20-day moving average, I think as support, may expose the dollar yen for a further potential short term slide to retest the minor range support of 24th of August to 1st of September at 14460 level. So flipping to a short-term bearish bias on the dollar yen, holding below 14790 key short-term pivotal resistance. But however, if we start to see a breakout above 14790, then we will see a squeeze up to test the key medium-term resistance zone at 14840/14885 on the dollar yen. Okay, so given the fact that dollar strength seems to be showing a bit of short-term setback in the major pair, so with that, the Aussie dollar, we will be pretty much unconvinced to actually look for a further setback towards 63.10 that we have for last Friday. So we'll be having a neutrality stand on the neutral stance on the Aussie dollar, pardon me, between 64.50 and 63.60. Only a breakdown below 63.60, then will actually revive our short-term bearish bias for the Aussie dollar to slide down to test that 63.10 support level. So turning neutral for today on the Aussie dollar between 64.50 and 63.60. And lastly, for gold spot, that means the XAU/USD. Still recall last Friday we are looking for a bullish bias holding above 1910. So yes, the gold, despite the fact that on last Friday it actually shaped a pullback below the intermediate resistance at 1928 and 1932 being the 50-day moving average, this line over here. So still no change. We managed to witness a rebound today at the 200-day moving average right now during the Asia session. So using 1910 still as a key short-term pivotal support level. So what's 1910? If we do the Fibo retracement of 21st of August to the 1st of September, this minor, we call it first uplift of this minor recovery is actually close to the 61.8% Fibo retracement. So still no change using 1910 as a key short-term pivotal support level. We're looking to play a further potential short-term recovery to retest 1932. A break above 1932 potentially could see the next resistance at 1938, and as well as the swing high area of 30th of August and 1st of September, acting as a resistance at 1948 level. So still maintaining that short-term bullish bias on spot gold. But however, if we start to see a breakdown below 1910, potentially we could actually expose the key medium-term support level at 1903, which is so this congestion area over here of 18th of August, the 22 of August broken, now turns into a pullback support at 25th of August, and as well as the minor ascending channel support from 3rd of November 2020, 3rd of November last year, 3rd of November swing low area. Okay, so with that, we have covered much ground on the key insights that I'd like to share with you all today. So we are approaching the 30-minute mark. So with that, I'll end today's session, and I wish you all a great day ahead, and I shall speak with you all again tomorrow. Thank you.